Let's talk about something that affects millions of us. Road tax. The way we pay for our roads here in the UK is on the brink of a massive, once-in-a-century change. And believe me, if you drive a car, this is going to directly affect your wallet. So, we need to break down exactly what's happening.
Now, to get our heads around this huge shift, we're going to be digging into a special analysis put together by the experts over at ProTax Accountant. They've crunched the numbers and looked at the policies to give us a really clear picture of what this road tax revolution actually means for every single one of us. Okay, so to kick things off, just imagine this for a second. What if every single petrol station just vanished tomorrow? Poof, gone. Sounds pretty dramatic, right? But, as millions of us make the switch to electric cars, that's pretty much exactly what's happening to the government's biggest source of road-related income. And that creates a huge, huge problem.
And that problem has a number attached to it. A very, very big one. See, this isn't a case of if the system will change, but when. The reason? It all boils down to a massive financial black hole that the Treasury simply cannot afford to ignore. And here it is, £25 billion. Let that sink in. That's roughly how much the government rakes in every single year from fuel duty. That's the tax you and I pay on every single liter of petrol and diesel we pump. But as we all go electric, that entire pot of money, which helps pay for everything from road repairs to hospitals, is basically set to evaporate.
And just look at how quickly we're approaching this cliff edge. Right now, in 2025, fuel duty is still bringing in a massive £24.4 billion. But let's fast forward 2030. That's when the ban on selling new petrol and diesel cars kicks in. And from there, that revenue just starts to nosedive. By 2040, it's not just a problem, it's a critical national shortfall. The numbers don't lie. Change isn't an option, it is an absolute necessity.
So this really gets to the heart of the whole debate. On one hand, you've got the system we have now, fuel duty and vehicle excise duty, the annual VED you pay just to keep your car on the road. It's a bit of a blunt instrument, really. Someone who drives 3,000 miles a year can end up paying the exact same VED as someone driving 30,000. On the other hand, we have the proposed solution, pay per mile. And the principle here is totally different and really simple. You pay for what you actually use.
Okay, so what does pay per mile really mean in the real world? The name is simple enough, sure, but as always, the devil is in the detail. Let's unpack it.
So here's the absolute crucial point. Pay per mile completely decouples tax from the fuel pump. Instead of taxing the petrol you buy, the government's going to tax the distance you travel. It's a direct charge for using the road network. In theory, it seems like a much fairer way to pay for the wear and tear you're actually causing. But stay with me, because this next point might actually surprise you.
A really key argument for making this change is all about fairness. And this quote from a University of Manchester study, wow, it really hits home. It suggests our current system is actively punishing poorer families, creating something they call a poverty premium. I mean, how can that be?
Well, this chart shows that poverty premium in action, and honestly, it's staggering. It turns out that because lower-income households tend to drive fewer miles, often in older, less fuel-efficient cars, their effective tax rate per mile works out to be about 10p. Now compare that to the 3.2p per mile paid by higher-income drivers, who often have newer cars and drive a lot more. It's more than double. A pay-per-mile system is trying to fix this exact imbalance.
Okay, so the theory sounds pretty compelling, at least for some people. But it immediately brings up a massive practical question, doesn't it? How on earth would the government actually track the miles of 34 million cars on UK roads?
Let's just be honest. This is the first thing that pops into everyone's head. Is Big Brother going to be in my car? Is some government tracking device going to be fitted in every vehicle? It is the #1 concern, and you know what? It's a completely valid one. So let's look at the options that are actually on the table.
Right, so there are basically 3 main ways this could all work. The simplest is self-declaration. You just report your odometer reading at your yearly MOT test. Easy enough. The next level up is in-car telematics. Basically a small black box, just like the ones you might get for insurance, that just logs the total distance you've traveled. And then you have the most advanced and definitely the most controversial option, GPS tracking. This is similar to what they use in Singapore. It could allow for all sorts of variable pricing, like charging you more for driving into a congested city centre at rush hour. You can just imagine the privacy debate around that one is going to be immense.
So let's get down to brass tacks. Forgetting the politics, forgetting the tech for just a moment, what does this actually mean for your bank balance? Who wins and who loses in this new world? To make this feel a bit more real, let's create a quick profile. Let's meet Ben.
He's a freelance photographer living in London. He needs his car for client shoots, but he doesn't drive it every day for a commute. He's a classic example of a low to average mileage driver. So how would he get on under this new system?
Well, this table lays it all out pretty clearly. Right now, Ben is paying around £490 a year between his VED and his estimated fuel duty. But under a pay-per-mile system, let's just say at a rate of 3p per mile, his total bill could plummet to just £180. That's a huge saving. For low-mileage drivers like Ben, this could be fantastic news. But, and it's a big but, a high-mileage sales rep who's on the motorway all day could see their costs go up a lot.
And here is a fantastic pro tip from the experts at Pro Tax Accountant. Don't wait for this new system to arrive. Start figuring out your annual mileage right now. Seriously. Dig out your old MOC certificates or just keep a simple logbook. Once you know your numbers, you can do the math for yourself and see if you're likely to be a winner or a loser. Knowledge is power, right?
Now, all of this sounds very logical on paper, but let's be realistic. Implementing a change this enormous is never, ever easy. There are some really serious roadblocks and major controversies that have to be dealt with before any of this becomes a reality.
Here are the big 4 hurdles. We've already touched on privacy, that's a huge one. Then there's fairness. I mean, what about a nurse who lives in a rural area and has absolutely no choice but to drive 50 miles a day to get to work? They could be seriously penalized. Then you've got the EV dilemma. If you start taxing electric cars too heavily, will people just stop buying them? And finally, maybe the biggest hurdle of all, getting the public and politicians to actually trust and accept such a massive change.
And you know, that EV dilemma, it's not just a theory. Just look at what happened in New Zealand. They brought in a road user charge for electric vehicles just last year. And the result? A dramatic, sharp fall in new EV sales. It's a really stark warning. If you get the policy wrong, you could stall the entire green transition practically overnight.
So, with all this swirling around, what should you, as a driver in the UK, be doing right now? This isn't happening tomorrow, but it is on the horizon. Here's how you can start to prepare.
Okay, first, like we said, know your mileage. It's the most important number. Second, work out what you're paying now so you have something to compare it to. Third, stay informed, keep an eye on the news because this debate is only going to get louder. And crucially, start thinking about how this might affect your next car purchase. Subtly, a low-mileage lifestyle might become a lot more financially attractive. And of course, if your situation is a bit more complex, getting some expert advice is always a smart move. And before we finish up, it's really important that we're crystal clear on this. The information in this analysis is for general guidance. Tax law is incredibly complex and it's always changing. So before you go and make any big financial decisions based on this, you absolutely must consult with a qualified professional.
And for that very professional advice, you can navigate the road ahead with confidence by speaking to the fantastic team at Pro Tax Accountant. They can help you with your specific questions on road tax and really all your other accounting needs too. You can reach them on WhatsApp or by phone at 07985 689 912, or you can just drop them an email at info@protaxaccountant.co.uk. And for more brilliant updates just like this one, make sure you subscribe to their YouTube channel.